Facing the Mortgage Crisis is part of CPB's Public Service Media Economic Response Initiative.
It's being called a mortgage meltdown, and it's walloping the economy nationwide, across California, and right here in our region. And made worse by high unemployment with layoffs leading to more defaults. The mortgage crisis in the Central Valley is bad and getting worse. First, homeowners with subprime loans, and now borrowers with good credit are struggling to stay in their homes. For many, owning a home was the American dream. Now, for some, it's become a nightmare. In the next hour, during this town hall meeting, we'll look at the crisis in our region, seek advice and solutions as KVIE Public Television brings you Facing the Mortgage Crisis.
Welcome to Facing the Mortgage Crisis. I'm Jason Schultz. We welcome you to this town hall meeting. Now, we're joined by experts, government officials, and our in-studio audience with folks that are people that perhaps maybe just like you, homeowners who are looking for answers. We'll take a close look at the emotional and financial toll that foreclosures are having in our area.
Hi there, I'm KVIE's Rob Stewart, and we are here looking for answers. We want to help you and everyone watching survive these dismal economic times. As you know, the Central Valley is considered one of the worst places in the entire nation for the number of people losing their homes.
Now, we've got a panel of experts standing by to answer questions, and you'll meet them in just a few minutes. But in the meantime, if you're looking for information, please dial the toll-free number that you see on the bottom of your screen, and you'll be directed to resources in our community.
My KVIE series, Rob on the Road, has taken me to communities throughout Northern California, and I've been honored, as well as Jason, to travel the region and meet many wonderful people. Though we've seen so much that this area has to offer here in the Valley, the heartbreak of these trying times is impossible to ignore, with unemployment leaving people jobless, homeless, and desperate. Sacramento's once highly visible and infamous tent city is today little more than a sporadic memory.
Unfortunately for some folks, they literally ended up sleeping outside in a tent within view of our state capitol, which is just, less than a mile from the location of Tent City.
A few makeshift shelters dot the landscape, but for the most part, the homeless have retreated to more isolated campsites.
The economy has driven more people into homelessness, and even at Tent City, which really was a place of last resort, about 25% of the people staying there had been homeless for shorter periods of time, maybe 6 months or a year. And these are people who might have worked in the housing industry.
A plummeting housing market, collapsing auto industry, and skyrocketing unemployment have experts comparing our current economic climate to the dire days of the 1929 Great Depression.
I do it all. Construction, foundation, decking, framing, things of building construction trade. Like I said, the economy here is bad.
Elgin Bouillard diligently looks for work, but a flailing construction industry offers little hope. He's now homeless. Loaves and Fishes near downtown Sacramento provides Elgin with food and support services. The nonprofit says its caseload has grown 10% this year.
And we see new faces every day. Brand new faces. Before, it would be a rarity.
Kimberly Adams is one of those new faces. She was a secretary for 20 years until recently being laid off.
When you're unemployed and you can't afford housing, this is where you're going to end up.
Sacramento's been especially hard hit by the mortgage crisis and has the third largest foreclosure rate in the country. Investors who bought at the peak of the real estate market counted on an equity boom.
Families renting these properties are renting them for maybe half the mortgage payment. Investors struggled to make the mortgage payments for a while.
Felicity Lyons, who works for the California Coalition of Rural Housing, says in this economic meltdown, many investors are simply walking away, and often renters are caught off guard.
They find themselves facing homelessness, perhaps not in what you think of as the traditional definition, but maybe moving in with relatives or having to live in substandard housing.
Natalie and Larry Burton both have jobs and have been renting a home for 6 years. They pay $1,400 a month. A few months ago, they were notified their house is being auctioned off.
The person that owns it has disappeared. The house is now in foreclosure, and we're waiting to hear from the bank as to how long we have to move out.
The couple is looking for another place to live. Their $3,500 deposit is gone, so they've stopped paying rent.
So we've started accumulating boxes, getting prepped to go, so we're just kind of waiting for the knock on the door.
Natalie and Larry are caught in the middle of the perfect storm, a crumbling economy. Yet they're searching for a safe haven and a way to buy one of these abandoned homes at an affordable price.
A place right across the street from us just went for $90,000, and they were asking $250,000 2 years ago.
Soon facing homelessness with children and dogs, Natalie and Larry are holding on tight, trusting their roller coaster ride will take them to their very own home.
And that is the hope all around this region. Joining me now is Joan Burke from Loaves and Fishes. Joan, I want to talk to you a little bit about one of the things we heard there was the perfect storm, the phrase that was used. This is really a national crisis, but here in the Central Valley, it's doubly so, correct?
Absolutely. Homelessness in Sacramento has gone up 14% just in the last 2 years. And at Loaves and Fishes, the families that we see coming for help were not necessarily homeowners, but the people who were renting homes that were foreclosed upon. And often, if you couple that with the loss of a job, then that family pretty rapidly can end up homeless.
And we're seeing that all over. You talk about lots of state employees here. There's been lots of furloughs, lots of layoffs, businesses as well. It can really be insult to injury because you have the rent, you have the home, losing those things.
Absolutely. There's been a saying for a long time that many of us are just 1 or 2 paychecks away from homelessness, and sadly right now we're actually seeing that. I also had a question for the panel, because we do see these families who were renting and have lost their home, and often the first thing they know is, that somebody's on the door literally saying they have to leave, and they have very little notice. I wondered, what are the legal protections that someone has who is renting a home that is foreclosed upon?
That's a great question. We'll send it up to Rob for the answer. Thank you, Joan.
Thanks, Jason, and we'll get to that question because that one and so many more are just heartbreaking, but it really begins with getting help, and that's what we're here to do. Joining us now on our panel of experts is Manny Randawa from the California Senior Legal Hotline, Pam Campbell, who is with NID, the Housing Counseling Agency, Demetra Moore from Home Loan Counseling Center, and Mike Hines on the end with NeighborWorks. We appreciate all of you being here. Let's get right to Joan's question. What do you do, Mike?
In our particular case, we recommend that people call the Human Rights and Fair Housing in Sacramento. They're a wealth of information. If they don't know the number to that, and I don't have it offhand, then
we'll
in
get
addition
it. We'll
to
put
that,
it on the screen.
211, people calling that can get information and help on what they're doing if they're a tenant. There are laws that protect them. There's a certain period of time that they're allowed to stay in the home. If they've got a 6-month lease or a year lease, the lender is required to honor that. Otherwise, I believe it's, Manny, maybe you know a better answer, 60 or 90 days that they have?
Right. The Congress recently passed a law that requires the new owner of a foreclosed property, and it's usually the banks now, to provide a written 90-day notice to the person who was renting the property before they can begin eviction proceedings.
So they have to receive that written 90-day notice.
That's right.
Okay. This show, as we've been saying, is for people who are in the middle of the crisis or frankly see it coming. Something could be changing in their life and they know that they're not going to be able to make that payment. Every circumstance is different. Every single one, as you just saw in the story. But what help is available out there, and I'll come to you for this, Pam, for people who are dealing right now with the foreclosure weighing on their shoulders, that it's just happening?
Well, those people who are having trouble with just now getting notices of default, they're getting the furloughs, a lot of the state employees, they can call any of the nonprofit housing counseling agencies to get help if they are facing, if they've got a notice of default. We can contact their lenders trying to work it out and stall those proceedings so they can buy time in their home, whether they're current with imminent hardship with the loss of the income or if they're already behind on their payments,
Right.
they can make that phone call and we can start working with them to get in touch with their lenders to start the modification process.
So the key is don't bury your heads in fear, but to reach out for help.
Absolutely.
Jason's got another question.
That's right, Rob. And one thing we do want to remind folks, if you have specific questions on the mortgage crisis, operators from 211 will connect you to the resources in your community right now. If you're in Sacramento, call 211. If you're outside the area, call 1-800-500-4931. Now, we've got an email that was sent in by a viewer, and let's read that right here. It's a great question. I got a letter in the mail by a company who told me they will get me a loan modification and lower my loan balance down to the current value of my house. They want me to pay them $2,500 to do it. Should I pay for that service? That's a good question for the panel.
That is a very good question. Dimitri, I'll come to you on that.
The real thing is to make sure you get educated to the process. Most of those companies that are soliciting your services are just a scam. They really just want you to pay the money. Everything that they're offering they can do, you can do on your own for free. Or once again, one of the HUD-approved counseling agencies will be able to help direct you to the right resources to be able to get it taken care of also. And the other side, it's not a guarantee. So you have to think about, if I'm going to give them this money, am I going to really get the result? And you could be using that maybe towards your mortgage payment.
Is it fair to say that if usually money is involved, there should be a red flag?
Yes.
Absolutely. I think it's important to remember that California has laws regarding who can charge you money up front for loan modification and other foreclosure avoidance services. And the law basically says that unless it's an attorney, they can't do it if a notice of default has already been issued. And prior to that, a person or company that's licensed by the Department of Real Estate can also require an upfront fee, but there are requirements for the written contract. There are certain standards that have to be met for that.
Okay, so let's run through the biggest red flags because there's so many scams. So what we can tell people is, who can we trust, Mike?
I think a good source is our California Department of Corporations. They publish a survey that's done by 19 to 23 servicing companies that are licensed in the state of California. And that information, and looking at the first quarter of this year, that information shows that each month, January, February, March, each month, there were over 110 hardship requests made, 110,000 hardship requests made just in California each month. Out of those, the servicing companies are reporting about a third of that number being resolution. And of that, they say out of those that are resolved, 0.1%, that's 1 out of 1,000, actually receive a lower loan balance.
With all of these questions that come up, your type of agencies say, come to me before you make any decisions. Let's go to Jason with another question.
Rob, we've got a question from the audience. I'm here with Saray Keo. Saray, you've got a question specifically about scams and folks that may have paid money to get these sorts of modifications done, right, Saray?
Yes, I've encountered some people who've already paid money to these agencies. And is there a place that they can report these scams? Because after they paid the money, they basically tell them that there's nothing that they can do about their loan.
I would report them to the Department of Justice, the Attorney General's office, and you can also report them at the Department of Real Estate. In fact, the Department of Real Estate has a list on its website of cease and desist orders, and it's a long list of cease and desist orders that have been issued to companies who cannot continue to collect money for what ends up being no service at all.
Sounds like an insult to injury for folks that are down on their luck, right?
Right. And they should seek help. Even though they've paid and haven't gotten any results, they don't stop. They should continue. They should call one of the agencies to proceed where they've left off and then try to maybe collect a refund or something. But the main purpose is to proceed forward.
All right, that's very good advice. Thank you. Well, as we see, there are so many problems abounding with this topic, and while our entire region has been especially hit hard, Stockton is considered ground zero nationwide for the number of people losing their homes. But that does not mean this determined community is giving up. In fact, people who live in Stockton are vowing to rebuild and reclaim some of what has been taken away. Determined to heal, Stockton is embracing the future. A painful past and present have residents frantically scrambling for solutions.
Stockton has been looked at in many cases as the ground zero throughout the country for the foreclosure crisis.
1 in 11 households is in foreclosure. It is the highest rate anywhere in the country.
It's a major crisis, and in my opinion, it's a meltdown.
Few neighborhoods have been spared.
It's been a terrible situation in the minority communities, but this mortgage crisis has impacted many different segments, regardless of income.
Angela Aratus and her husband Juan bought this Stockton home in 2006 for $312,000.
Now they value maybe 120 or less.
The family struggled to hang on. Then Juan lost his construction job. Broken-hearted, they lost their home.
I cry most of the day. That Saturday. I know say I feel better right now because it's a process. I go in that process right now, and I'm so glad that I have friends and family to support me.
Experts say Angela and Juan fell into a common trap that's become a big part of the mortgage mess. They were convinced to apply for a stated income loan. In a nutshell, stated income loans, which are no longer available, don't require verification of your income and assets. They leave plenty of room for misinformation, even fraud. Loan brokers would inflate household earnings and help get loans that were far more than most buyers could afford, sometimes 50% or more of a family's gross monthly income. And often, the terms and loan details were nearly impossible to understand.
We have seen in the Hispanic community, and I'll use our community as an example, where you've had young children translating for adults critical legal documents, and in many cases the adults trusting, of course, their children to provide this important information. The individuals on the other side should have known better.
Foreclosure incites a myriad of emotions: anger, remorse, regret. Frustration is sometimes taken out on the property. Cement poured down toilets, holes punched in walls, trees yanked from yards. A bank program called Cash for Keys encourages homeowners to leave the houses quickly and in good condition. Abandoned foreclosed homes with brown lawns and boarded up windows are unsightly. Even worse, they diminish the value of the entire neighborhood by as much as 10 to 20%.
And this is a home that Service First recently purchased for the Neighborhood Stabilization Program.
Sharon Seamus works for the nonprofit group Service First of Northern California. The agency has been awarded federal dollars to purchase foreclosed homes, fix them up, and sell them to homeowners at a bargain price.
Because Stockton was one of the leaders in the nation for foreclosed homes, our county was given $12 million and the city of Stockton was given $9 million.
Carol Ornelas is with Visionary Home Builders, another nonprofit committed to using federal money for neighborhood revitalization.
And for the last 2 years, it's been a main focus of our home ownership center is foreclosures, and so we like that aspect to go away, and that we're working more on the side of putting people into home ownership.
She sees that funding helping in other ways as well.
We are seeing some positive results under the President's stimulus package that is helping foreclosed families to stay in their homes.
No question, Stockton is struggling. Rich in history, saturated with compassionate citizens, and full of civic pride, the city will survive.
Cities and communities need to take back what belongs to them, and that's our households, our neighborhoods, and really lean on each other to pull ourselves out of this mess.
I'll tell you, that hits home. I mean, it really sort of leaves you speechless, especially the tears you see. And I want to jump on that by saying, how has the law changed to help protect people from facing what we're seeing now with this current mortgage meltdown?
Well, we're seeing a crackdown on a lot of the exotic products, loan products that had been made to contribute to this mess. Some of these option adjustable rate mortgages and stated income loans especially, where brokers were able to go in and just write in, an income for maybe an unsuspecting borrower, raising it 2 or 3 times to get them qualified for a loan they couldn't afford. And so we're seeing a crackdown on that, and it remains to be seen whether that's going to make the difference.
We shall see, and we also will follow up. Who is responsible for these toxic loans?
I would say that the brokers, the lenders, and the public are responsible, because even with stated loan products, the borrowers who are signing these documents have to read them, and they have to know that they don't make the income, and even though they can afford this payment today, they're not going to get the income increases on their jobs to sustain the adjustable rates that are going to happen down the line. The mortgage brokers are just telling them, yes, you can refinance in 2 years, not knowing what the equity is going to be like or what their financial situation is going to be like. And then the lenders and the underwriters for approving them and not seeing all the red flags that there had to have been when these thousands of loans went through.
Demetria, you told me that a lot of this has to do about education on all sides.
It does. It does. Most of the families that we see within our organization, a lot of them didn't know what it meant to refinance. So when the professional was talking with them and said, don't worry, you can refinance in 2 years. Don't worry, you can, just move into a different type of loan. They didn't really understand that you have to have certain things fall into place to be able to do that. And so they were just waiting for that to happen. And as we know in our marketplace, it just didn't happen.
Let me ask you this, Mike. Are there any grants available, other venues, that can help people catch up when they're 2-3 months behind on their payments?
The best answer to that is that each lender has, an investor has some kind of a program to help people get back on track. Some of those programs are affordable, some aren't. And this is where housing counseling agencies can help people. There isn't any money out there. As far as a grant, you don't have to pay that back. That money doesn't exist. But being able to take past due payments, incorporate it into the loan, put it at the back end of the loan, set up a payment plan that's affordable to get people caught up, very similar to what our president's plan is, those things are available.
Okay, great. We'll get back to this too also. Jason, you've got another question?
Yeah, that's right, Rob. One of the things we hear a lot about folks all over the area that are underwater on their mortgages, but maybe trying to do the right thing. They don't want to foreclose on their home. Maybe they're trying a short sale. With me is Kimberly Walton. She's a Modesto realtor. And Kimberly, one of the things you specialize is on short sales, but these can be very tricky for folks.
Yes, that's true. First of all, the people have to prove that they are in some kind of hardship. And that could be that they're having a job transfer, they've lost a job, they're going through a divorce, they've had a child that becomes ill, and they have huge medical bills. So that's the first step in a short sale. After that, if they get behind, then they need to contact a realtor, of course, that knows what they're doing in the short sales, because the negotiations can go on as long as 2 years sometimes in these short sales. The average is 5 to 6 months.
And that, for a lot of folks, 2 years is just not doable when you're talking about being underwater. Maybe they have to move. Maybe they're facing financial problems. I imagine a lot of folks just decide to walk away.
They do, and that's unfortunate, because there are ways that they can be helped with doing a short sale. The other thing is, then they don't have a foreclosure on their record. If they're doing a short sale, they're trying to pay their bills, and they're showing the bank good faith that they are absolutely trying to make some kind of payment on this defaulted loan.
Well, thank you, Kimberly. A very touchy subject for a lot of folks going through that, right, Rob?
Absolutely it is. And I'm just curious, why do the banks hold on to that money? Why is it the banks, they're just gripping down on that so hard?
That's a good question, because the heartbreaking thing about this is that there's a difference between someone who's just not happy the fact that they owe more money than the house is worth, and they're ready to walk away. But there's other people who really want to stay in their house, whatever it takes, and they're making income, but because their investor doesn't allow it, or some other circumstances, they may not get the option to stay in their home, and that's what's sad.
One more question before we move on to the next topic. Should someone who's in trouble reach out to the lender and to an organization like you guys have and so many other people in this region have?
Well, I think it's important to know that the homeowner shouldn't sell themselves short. They're capable of doing a lot of these things on their own. If they're prepared with the right documentation, getting a hardship letter together, proving their income through their W-2s and tax returns and stuff, they can actually contact the lender and get the ball rolling. However, the loss mitigation maze, when you have to call into a servicer, is just very frustrating, and that's where our organization can, or our organizations can come in and assist them.
Okay.
Go ahead, Mike.
Can I add to that? Because that last number that I gave, in 1 month, 110,000 modification requests were made. Well, we're looking at 4 organizations here, and we're talking about even if we were able to handle 1,000 in 1 year, and not in just 1 month, you can, and the capacity that we have, our responsibility is to get that message out and get people to open that door and start talking to their lender.
Okay, great. Jason.
Rob, one of the things we do know is that there are folks that are trying to make the best of this situation because they know that we're all in this together and communities live or die based on the action that folks take on the ground. Sharon Seamus is one of those folks. She's from Stockton, and she's working to revitalize neighborhoods. Sharon, I want to talk to you a little bit about what you're seeing in Stockton. You're trying to get homes revitalized so folks can get in there and get those neighborhoods going again, because Stockton's been hit so hard.
That's correct. We're one of the nonprofits that was selected by both the county and the city to run the neighborhood stabilization program. And that program specifically consists of the nonprofit going out and purchasing foreclosed homes specifically for owner-occupied people. And we renovate the home after we purchase it, which has to be purchased at what used to be 15% below market value, but there was a law change which is now allows us to purchase it 1% below the market value. We renovate it, and then the home is sold for that exact cost, what we pay, the purchase price, the renovation cost. So the person buying it is able to acquire a home at a very good value. It takes away the blight from the neighborhood, and especially in Stockton where we were hit so hard.
Well, good luck with your efforts. Sounds
Thank
like
you
you're
so
on the right track there in Stockton. Now, what we want to do is open it up to the floor here. Anyone have any questions about anything that you've heard so far during the show? Yes, I'll go to you in the back here.
Sure. This follows on the last answer that you just got, the last statement that you just got. They have the opportunity to buy the homes at basically at the current market value or even a little bit less, 1% less, she said. Why don't the banks just allow the current homeowners to modify their loans to the current value? Because if they foreclose, they're not going to make any more than that. In fact, after all the costs and maintaining the houses and selling them, they're going to lose more. Why don't they just allow everybody to modify their loans if they can afford the new payments at the current market value?
That goes all back to the whole issue of whether or not principal is being modified, and that's a great question for the panel.
Absolutely. Pam?
I've seen one principal reduction that was actually a needed principal reduction. They're basically a coin toss in situations where the homeowners are so far upside down and we think a principal reduction would really help them. They have good income, good credit even. They're just not doing it. It's just kind of, they're cherry picking who to do the principal reductions on. And what they should do is just bring everything down to market value where the homeowners can in fact stay in their homes versus doing a short sale and having those homes remain empty for years.
If you could put a quick percentage on it, how many people would you say that are upside down that are actually getting loan modifications?
2 or 3. It's a very
2 or 3%.
2 or 3%.
All right,
it's very rare.
Let's go to you.
Rob, Sacramento and Elk Grove have some of the highest foreclosure rates in the area. For sale signs are hard to miss. But what you don't see behind closed doors, people's hearts are breaking.
Home is where the heart is, and Nelda Machuca has spent years planting memories in her Elk Grove backyard.
I had my daughter's wedding in my backyard. When I first moved in here, I loved the house itself, but it didn't feel like home. But after all these years, when I walk in, it's after a really hard day of work, it feels so good. I'm so at peace.
Nelda works as a housekeeper.
I've worked my whole life from the time I was 18.
She bought in 2003 and refinanced before the market spiraled downward.
I paid $280,000 for the house 6 years ago. States that the house is now worth $230,000, and my mortgage is $404,000.
She's what's called upside down in her mortgage. That means she owes far more than what her home would appraise for today.
My house payments as of this month are ballpark $2,752.34.
That's 70 or 80% of Nelda's total income each month. Credit counselors recommend house payments be about 30% of your earnings.
Now I'm scared to death of what do I do and where do I go and who do I trust?
Nelda also has a 30-year interest-only loan. She has no equity and never will.
I'm paralyzed to call anybody because the same way that my loan was a predatory loan, I know that the same people who gave those loans, according to the news sources, are the same people who are now doing all these modifications.
Experts caution homeowners about scams that reportedly are abundant. One look around Elk Grove, and it's obvious why people there could be prime targets. The area is at the forefront of the real estate nosedive.
I don't have a lawyer's mind. You know, I don't have their vocabulary. I didn't understand everything. And I just do the best I can. And I guess it didn't work out well. But it's not just me. There's a lot of people out there that, you know, have the same thing has happened to them.
Juliet Roberts is one of them. She's desperately trying to sell her cute little 726 square foot home in Midtown Sacramento to save her job.
The company that I work for is closing their local office. They're consolidating, so I'm going to be either I need to sell my house, which is difficult to do in a time where I have negative equity, or I'm upside down, so to speak, or I stay here and try to look for work and try to hang on to my house somehow.
Juliet bought in 2005 and put $95,000 down. She had a negative amortization loan, and within 2 years, the amount she owed had climbed $13,000.
I started researching it and I realized that I just had to get out of it because I would eventually just lose my home.
So Juliet paid $11,000 to refinance. To qualify for a new loan, she was set up with a first and second.
I have the first loan, which is an interest-only loan for the first 10 years. And after the first 10 years, then it becomes fully amortized based on the principal, which after 10 years will still be the same, I believe. The second loan is a 10-year fully amortized loan, so I'm actually paying down that loan.
However, when the second is paid off, the first will increase by $400 to $500 a month. At the moment,
my payment currently with the first and the second combined, I want to say $1,860.
Juliet has an almost perfect credit rating. She doesn't want to ruin it by foreclosing, but she can't afford to keep her house and rent it out. The payments are too high, so she's trying to get a loan modification.
Yes, hi John. My name is Juliet. I'm calling about my home mortgage.
Juliet has spent hours on the phone with her bank.
I'm on hold. There was one day where I literally went back and forth between two departments 4 times.
Frustrated, Juliet is turning to the nonprofit group NeighborWorks for help.
I'm calling with some questions. I understand I've heard wonderful things about your organization, and I understand that you may be able to provide free legal advice. I was told that they can actually help with the process. So if I submit my loan documents and then I go to a seminar, they will then let me speak with a counselor and get me in contact with somebody who may be able to provide me with some free legal advice.
Perhaps a ray of hope has streamed through her kitchen window. In the meantime, Juliet lives day to day, not knowing if she'll have a job, a house, or either.
I've worked years and years and years to create my nest egg, so to speak, and it could be gone in an instant.
Nelda, you were featured in that story that we just saw, and we thank you so much for sharing your story with us. We're hearing these stories all over the region, but yours is heartbreaking. Tell us where you're at today.
Well, I've begun the process of asking for a loan modification. Nothing's happened as of yet. I haven't heard back from them. When I did call, I did have some money to make a payment before we started the process, because the first thing he asked me on the phone was, how much can you pay today? And I said, I have $2,254. And I asked the gentleman on the phone, will you put this towards my payment? He said yes. And then I said, and are you going to charge me a late fee? He said no. I got my statement last week, and they put the money in unapplied funds.
Unapplied funds.
I don't know what that is. I got on the internet. I'm not very computer savvy. And they did charge me a late fee. So now I really don't know what to do. Now I feel like I feel like they lied to me because I really want to make my payments. I want to see if I can get a modification. I want to try to do everything I can to fulfill my obligation. But I don't know. As I said in the piece, I don't know who to trust.
Well, that's exact. Trust is such an issue here. I want to bring in Juliet as well. Juliet, if you don't mind standing up here, let's talk to you as well, because we just saw your story as well. Both of you are facing such a serious situation that we're seeing everywhere. Where are you at right now, Juliet?
Well, I've taken my house off the market because the value has dropped about $120,000. And so as of early September, I'll be without a job and with the same mortgage. So
you have, it's just an insult to injury, you might say.
It is.
And so what do you do now?
Well, I'm currently a claims adjuster. I've been doing that for about 10 years, so.
And when you look at the situation with your homes, both of you, trust is clearly one of the biggest problems that you face. Do you feel like the folks that got you into the mess that you're in right now are the ones you're going to for help?
Absolutely, and I've spent hours and hours and hours. I'm in customer service, and I'm just very surprised at the discrepancies and the different communication and information that I've been given. And I don't really know what to expect in the future. I just hope for the best.
Well, let's ask the panel. What do you tell folks like this? I know this is types of stories you hear every day. You know, where do they go?
Yeah, and Mike, I saw you gasp when Nelda said she was asked to give money.
Yeah.
Where do they go?
So, in understanding the process, first of all, the problem is huge. Lenders are so backlogged with work and getting things through. It's not uncommon for someone you turn in all of your paperwork and find out a month later your whole case has been canceled. You're getting calls from collectors, so they have a collection department, and they're asking for the money up front. They'll get a bonus if they can get the money from you, so they get bonuses on that. You really are trying to get over to the department that we call loss mitigation. I think people here, it's kind of a common word now for the modification, but even during that period of time, that could be 2.5 months, and being proactive and calling all the time. Where's my case at? Do you have the paperwork? Do you need anything else from me? Making sure that's communicated. We're finding now that people are the lenders call out, and if you don't respond back to them in 24 or 48 hours, they cancel your case and send you a letter that you didn't respond. So it's really up to us to stay on them.
Is it hard to do that? Is it hard to stay on them like he's talking about?
Well, yeah, because I work. I'm trying to work. I mean, I had to change my whole schedule just to be here today, and I have to work doubly hard tomorrow because I am trying so hard to pay everything. I have never missed a payment in 32 years. I have never not paid any bill. I mean, I may have been late, but I always make it up. I have never done this before, and so I can't be on the phone hours and hours on time. I mean, I just can't.
And I imagine pride is obviously something as well. When you say you haven't missed a payment in your life, it has to be hard not to make a mortgage payment.
I struggled. I mean, for me last month to not make that full payment is because I did not ask my family for money. I have been asking, everybody's been helping me out. So, yeah, that's tough.
I think one of the other things is understanding the process. I think you have to realize that you're talking with two entirely different departments. So what you want to talk with is that loss mitigation. Their role is to try to solve things. Customer service, their role is to collect. So when you send in the payment and it's not the full amount, they don't really know where to apply it. So that's why they sit it, it's called a suspense account. So they're sitting it there until they have a full amount to apply to that previous payment. So really just understanding kind of the process, that's what our agencies help with, to be able to help walk you through. When you do send a payment, it is a good thing because it gives you more time. It takes a while for them to be able to put everything together. Some of the servicers, it's 120 days. So in that 120 days, by making payments, even if it's partial payments, you're not so far down the road because they do keep things going. And so you miss 3 payments, you're going over to the foreclosure department. So by making a payment every month, it might take you 6 months to get 3 months behind. So that's part of the process, though.
We have so many questions, Nelda. I wish you luck. I hope things work out for both of you. We have some other questions coming in. This one from the internet. It says, I live on a street where 8 homes are in foreclosure, something we're seeing everywhere across this area. How do they protect their property values?
So in that case, there's not anything that you can do to the market value in general. Values are coming down, but there is something that you can do for your individual street to try to maintain as much value as possible, even with the total market values dropping. And that is knowing who to file complaints with your local city and county. If you live in an association, to make sure that they're staying on top of things. Stay together as neighbors. Report when the weeds get so high that you can't see anything. You have a right to call your county and city, file a complaint so that gets taken care of. Just don't let it go. Don't hide in your house and not do anything about it.
Okay. Well, we know the mortgage crisis is deeply affecting our communities. Here's a look at how it's affecting our children as well. Neighborhood blight in some areas of the San Joaquin Valley represents financial devastation and heartache that cannot be disguised.
I know Modesto is really impacted.
These abandoned, neglected houses are just a few blocks away from an elementary school in the heart of Modesto. Instead of children running and playing in front yards, the dilapidated, empty homes are littered with debris and deserted shopping carts.
The mortgage crisis is definitely affecting the students here, as far as if it's them losing a home or the house that they're in. It could be that the businesses are closing down, that their parents are losing their jobs from that.
Heather Sharp is principal of Fairview Elementary School in Modesto. She says unemployment and home foreclosures are taking a huge toll in her classrooms. Recess offers students a brief reprieve. Sounds of children laughing and jumping rope echo throughout the school's hallways and offices.
When you see children, they're resilient. You know, they can handle a lot. I don't want them to, though.
While kids are resilient, there's no question Fairview Elementary School is experiencing fallout from the mortgage crisis. As many as a dozen desks in some classrooms sit empty.
That class can hold 34. It's a 4th grade classroom, and right now it's at 22.
In the rock, over many years, the hole slowly gets bigger and becomes a cave.
Juan is 10 years old and in that 4th grade class with all the empty desks. Unfortunately, he knows all about the mortgage crisis.
We moved out of the house because we couldn't pay it, and they kicked us out. And we moved to our family.
It's been a tough, real-life lesson in economics for these students. Unemployment and home foreclosures are even leaving many of these kids without enough food to eat.
We have 900 students here, and 87% receive free and reduced lunch. And those programs are offered to students who their parents don't qualify, or they get a certain income.
They're giving me food that I may not have at home, but I have here.
10-year-old Alicia recently transferred to Fairview and dearly misses her old school and best friend.
My friend's name was Monica, and she was like my best friend since preschool, and I had to leave.
She was forced to move and change schools.
Because I lost my house.
Education does suffer when a student has to move continuously, and if they can't stay in one classroom for a whole year with the teacher, they're impacted.
Notices of default are the first step in the foreclosure process. Experts say they spiked again in the past few months in Stanislaus, Merced, and San Joaquin counties. That's not good news for the students at Fairview Elementary, who at their tender young ages crave nothing more than a tiny piece of the American dream, and that's a little stability.
For a perfect world, I would like my own house.
And one thing we know is the financial toll that can be made on a family facing situations like this. It affects the entire family, communities, neighborhoods. What we want to do now is open it up to the entire group here. Anyone have any questions that they'd like to ask? Go ahead.
My name's Garen Bratcher. All the scares on television, I've got my wife and I talking, and I told her not to worry. We have PMI insurance, and we were told that it was mortgage insurance, so we're safe because everywhere when I pay my car insurance and something happens, they pay for the car. I haven't heard that come up.
Let's ask that question to the panel. What about PMI insurance?
PMI insurance is really to protect the lender. It's not to protect the families. There are some things that can help you. It depends on who that insurance company is. So most of the times when families get behind in their payments and they're struggling, the insurance company will look at, is there a way for us to catch you up and get you caught up with your mortgage, but not really to pay off your loan for you. It's really to protect the lender.
Right.
And we've got another question here. Yes, tell me your name.
My name is Elizabeth, and I was wondering, why can the bankruptcy courts modify a loan for a car or a boat or a commercial property, but not for a home?
That's a great question.
That's a very good
Panel?
question, Manny.
That's a very good question. It makes no sense because, like you said, a bankruptcy court can modify a loan on a car or on a rental property, but not your primary residence. Congress recently entertained the idea of allowing bankruptcy judges to go ahead and start doing that. It got voted down. It made it through the House, but not through the Senate. And the argument on the other side is all these banks saying, well, now all the new loans are going to have higher interest rates because, you know, they're just all going to go into bankruptcy and then they're going to have to be modified. Well, Congress was thinking about passing the law with the provision that it would only apply to current existing mortgages, not new ones. And so that argument doesn't seem to fly. It got voted down anyway. The Senate, I think, is going to take a look at it again. Hopefully, in round 2, we'll get it through. That's where you all come in, talk to your senator. You probably won't get to talk to your senator, write to your senator, and hopefully they'll pay attention.
Well, let's go back to the audience again. Anyone have any other questions here? Yeah, go ahead.
With the renters that are still in homes that are being foreclosed on and short sales, are there any kind of programs in development that would allow these renters to purchase the home that they're already in rather than be evicted so that they can sell it to someone else?
That's a good question.
We had a difficult situation exactly that. The tenant had been in the house for several years and the owners were foreclosing. She did most of the work herself. We just opened up some doors so she had some contacts and she was able to purchase the house. So that was a success, but it's not an everyday occurrence.
Let me ask you this, because I know that we got to this earlier. Who is eligible for a home modification? You hear people saying, well, my neighbor got one, this person got one, so many people in our audience need one. Who's eligible?
Yeah. Well, the first thing is that you have to demonstrate a hardship. And there are a lot of people, and Mike has voiced this concern, there are a lot of people out there who see their neighbor getting a modification and getting a great modification, and maybe that person can afford to pay their mortgage, the person who sees their neighbor getting the modification, but they're upside down and they just don't like that situation. They're probably not going to get much help. There's not much principal reduction going on, but you need to demonstrate a hardship and that you can't afford the mortgage.
Do you mind me asking, just a show of hands in the audience, who needs a home modification? 1, 2, 3. I mean, people in every row in this audience. And the thing is, everybody's circumstance is different, which is why it's so important to come forward and get help.
Absolutely.
Because you really, I mean, it's hard to do this on your own.
And it also depends on who the investor is. That's really the key thing. That's why some families get one thing and another person gets something else, is because who's backing that loan? They're making the ultimate decision. If they're a bigger bank, maybe they can afford to let $60,000 go to make the loan work. That might be possible, but there are investors that are individuals. So what do they have tied to that mortgage payment? And that might not be something that they are willing to do or can do.
This might sound like a small thing, but you guys say it's a really big thing, and that's having all of your ducks in a row when you go forward to request a loan modification, because one little paperwork slip up will throw you to the bottom of the pack.
And the biggest thing I find that is the problem is people's income and expense declaration, their budgets. Everyone here is coming for a modification. They're facing financial hardship, but this is an affordability program. So if they are underwater every month, they are going to ultimately be denied. So that's when we come into play and we help them to work out a budget that their mortgage is affordable so they become a good risk for modification. Because if your lender sees you're swimming in debt, they're not going to approve your modification because it won't help you.
I've got a question actually that someone asked me earlier, and that's when they go to one of your locations, a client intake, if you will, what can they expect and what do they need to bring to the table?
So in our organization, we send out, we ask them to bring in a package before they actually come to an orientation, so we get enough information about them. We analyze the situation as far as their income and their debts. So when we meet with them individually, we kind of have an idea of what direction we're going. But the orientation is to kind of set the stage of what are they going to face. Is there a real opportunity for them to stay in the home? A third of the modification requests are actually successful. And that has to do with the dynamics of the investor. They should bring the same things into the counselor that they would have to be presented to the lender, pay stubs, tax returns, some kind of a budget that will help them work out.
What are some of the most common mistakes that people are making that that help foreclosure problems arise in mortgage crisis?
Not opening the mail. You need to open the mail. You need to, it's a scary thing, but if you attack it head on and you get in touch with one of our organizations, and even, if you know what to do, if you know what documentation you need, you need to be proactive and not let this thing grow and snowball.
Because it's natural for when something so scary happens for you really just to close up. You guys say open the mail and embrace it.
Answer the phone, find out what the lenders want. Even though you know you're in debt, you know they're collecting, find out what they want. And you don't have to answer the phone calls, just call an organization, tell them what they're asking for, let us help them before it gets too late.
Okay.
That's very important because in California, the lender is required to contact you 30 days prior to filing a notice of default.
Required?
Yes.
Okay.
We do have another question from the audience here. Rob, go ahead.
Hi, the panelists have mentioned that maybe only 2 or 3% of folks are eligible for a loan modification. And so I was just wondering if you could talk a little bit about what are some of the options that are available for those families who have lost a job, and what are the options that you present? I think, a short sale, but if they are not having success with that, if it's taking 6 months or something and that's just not within a timeline that works for them and their families, what are some of the options that you present to them instead of foreclosure?
And do you ever not suggest, but I imagine for some folks foreclosure may be the only option?
Mike?
In some cases, but the number is greater than 3%. It's closer to 30%. But not everyone's going to get the same modification. If we look at the President Obama's plan in making home affordable, you're looking at specific things that the person has to bring to the table in order to qualify. And the percentages on that, actually, we're starting to, the jury is still out on that, but we're starting to see more modifications come in. But not every investor is on board. Fannie Mae, Freddie Mac, who own a lot of those loans that have signed on to that. We're talking about maybe 35% of the loans in this country are Fannie Mae or Freddie Mac, so that cuts the numbers way down.
Mm-hmm. There are always going to be people who are going to face foreclosure, and they know it, and they know they can't afford the house, it's not sustainable. One thing that's important to remember is if it gets foreclosed, or even if you do a short sale, if it sells for less than what's owed, you could face income taxes because that's forgiven debt, and the IRS will look at it that way. There are exemptions, though, so you should talk to an accountant.
No, every day, each of you sit face to face with countless people. In fact, you've all told me how the numbers in your agencies have shot through the roof from the people coming for help. Is there a common thread of what people are coming for? I know all circumstances are different, but is there a common thread for the result that you're being asked for help?
I would say yes. Most of the families are coming in truly because they have had some type of loss in the household and they need to make the payment affordable for them. And to go back to her question as far as the different options, what the servicing companies are looking at is possibly a deed in lieu, depends on what the situation was, how did they get behind, is it solvable? So instead of going through the full process, do we want to just give the deed back? I can't afford it. They're willing to take it. That is an option also, but they're going to look at what is the situation.
Right.
They're also looking at, obviously, is there some type of modification that can happen? A short sale or the worst, obviously, a foreclosure.
Okay. Jason.
Juliet, we've heard all about your situation, and you said you have a question as well, looking to the future, right?
I do. I have a question regarding forbearance. So principal forbearance versus forgiveness.
Well, you talk about so many terms that are out there, forbearance versus forgiveness.
That's what the bank that I'm with has suggested. They've mentioned that under no circumstance will they do any principal forgiveness. but they may do a forbearance. And I was wondering what that means for the future. Am I going to have to pay that back later?
Great question.
A forbearance is a repayment plan of the debt that you owe. So forgiving is obviously wiping away that debt, whether it's arrearage, but forbearance is the banks trying to collect the money that you owe. So it's just restructuring what you owe for a certain amount of time, whether it's in the beginning or the end.
And usually what they do is they take, let's say they took half of your balance and say, you pay interest on this and make mortgage payments on this half. The other half we'll put at the end of the loan so that when you pay off this half or you sell it or whatever, then that will be a balloon payment that you'll have to refinance at that time or do whatever. So it's not forgiving the principal balance, but it is deferring it, putting it out at the end of the loan.
Let me ask you this. Do you think that we have seen the worst with this crisis?
Not yet.
I don't think so in the state of California. No. Absolutely.
We have a lot of option arms and other really bad mortgages that were put out there that are set to reset, meaning hit the cap of negative amortization and reset this fall and in the coming years. And so the wave is not over. The worst may be yet to come.
All of us at KVIE would like to thank our wonderful panel of experts. Thank you so much for coming, as well as our audience. Thank you for participating in Facing the Mortgage Crisis. For KVIE, I'm Rob Stewart.
If you would like more information on facing the mortgage crisis, the conversation continues online at kvie.org/mortgage. For KVIE, I'm Jason Schultz.
Thank you for coming. There'll be more questions. Thank you.
Facing the Mortgage Crisis is part of CPB's Public Service Media Economic Response Initiative. This program is brought to you in part by KVIE's production partners.